I know it's painful right now, and to be honest, I think the market can crash even more. And I did say that 2 videos ago, and truth be told, I am playing a bit defensive right now in waiting for the perfect time to invest more into the crypto market. So, when will it be the perfect time? I think I have figured it out, and that's exactly what we'll discuss in this video. How low the markets can go, when it will stop going lower, and when will the perfect time be to invest aggressively into the crypto market. First of all, the 4-year cycle is still intact, no matter what anyone else says. Take a look at this chart. Here 1 is the post-halving year, 2 is the bear market year, 3 is the recovery year, and 4 is the halving year. This pattern has held since 2013, and right now we are in the post-halving year, which always closes green. This chart also aligns with Plan B stock to flow model chart as well, in which we have around 7 more months on average for Bitcoin's price to top. I think the market will top around late 2025 or early 2026, and I have said this before as well, and I stand by it. Also, when you compare to previous cycles, we have had multiple minus 30% dips for Bitcoin in previous cycles as well. So this dip with Bitcoin is not a big deal. It's completely normal, to be honest. But I get it. The problem isn't Bitcoin. It's actually altcoins. You see, the max pain that is happening in this cycle right now actually comes from the pain from altcoins performing horrendously. People wanted to outsmart the crypto market by buying only altcoins and maximizing their gains. But the market usually does the opposite of what the masses predict. But is that really the case? I think there's much more to it. It might appear to you that when people buy Bitcoin, only altcoins go up, and when people buy altcoins, only Bitcoin goes up. But what if I tell you that that's not really what's happening? Alts will definitely pump more than BTC, but you just have been looking at the market the wrong way. Let me tell you why. Look at the BTC dominance chart since the last 2 years. It has been going up only. In a time like this, it's better to just hold BTC. Right now, we are getting close to the top for Bitcoin's dominance, and it will surely reverse. But how do we find out when it will reverse and when to go aggressive on altcoins? And I believe the number one indicator for an alt season is quantitative easing. When we overlay the WALCL chart on top of the Bitcoin dominance chart, we can see a clear correlation between alt season and Bitcoin season. Now, for those of you that don't know, Bitcoin dominance is a measure of the market cap of Bitcoin compared to the rest of the market. And WALCL is the measure of the assets in the Federal Reserve's balance sheet, which directly indicates whether we are in quantitative tightening or quantitative easing. Quantitative tightening is when the Federal Reserve is selling assets, increasing interest rates, and reducing liquidity in the markets. Less liquidity means less money circulation in the markets. Less money circulation means less money for assets like cryptocurrencies, which is not ideal. Quantitative easing is just the opposite, when the Federal Reserve is loosening monetary policy and there is more liquidity, meaning more money for risk-on assets like cryptocurrencies to be bought up. Until QT ends, Bitcoin season doesn't end. It makes sense logically as well. Since there is less liquidity, people don't like to take more risks. Hence, people invest in the safest crypto, that is Bitcoin. But when QE begins, as you can see in the chart, Bitcoin dominance goes down since altcoins start getting more attention. That's exactly what we are missing right now. For a true altcoin season to begin, we need QE. We will only get QE when we get rate cuts, resulting in a looser monetary policy. Now, according to the Fed, we likely won't be getting any rate cuts until at least June this year. So that's when I expect the markets to finally start taking off again. So that's all for today's video. See you in the next one.